What's up, everybody? This is a holiday edition, kind of YouTube Live Everything Phoenix. We're going to jump right in. You want to stay tuned to this because we are talking about buckling up for a wild ride starting early part of next year, guys. It starts in January. Spoiler alert, the market is going to go up, especially in Phoenix. I'm going to give you some data, and that's all I'm going to give you. And then, of course, my opinion of that data. But the reality is you want to pay attention and stay along for this ride here today because the market is not going to do most likely what you think it's going to do. I'm going to be more bullish now, more so than ever, especially after what just happened with interest rates and the one of the largest drops in a 45-day period in the 30-year fixed in several decades, multiple decades, guys. This is huge. So you want to stay tuned. We're going to talk about that. Rates now today are hovering around 6.64% on the 30-year fix. And guys, did you know October 19th, it was at 8.03. All right. And that's for the top of the line, best, most qualified borrowers. So this is going to be interesting. It's going to be interesting a lot for for reasons that Phoenix real estate is hot already as it is when it comes to January, guys. And I think you're going to see across the board if the Fed keeps doing what they are talking about or hinting at doing, we're going to see rates that are going to be, in these sixes, maybe even a little more here, Q1 of next year, towards the end of Q1 next year, and even in markets where you have cold weather, you have snow. I think you're going to start seeing a lot of activity start to pop, even in those markets, actually, which is quite interesting and a little bit different than what we were at in terms of the outlook just a month or two ago. But as news change, as things comes out, we are going to report on that first here for you guys for Everything Phoenix because it's data over drama, baby. It's always data over drama. So if you could just go ahead and comment if you would like. Ask a question. Let us know where you're watching us from. We love actually talking to people from across the country and Canada as well. A lot of it still applies to you guys. Obviously, you don't have the Fed. You have your own policy when it comes to monetary policy in Canada, but the market is still going to move a lot of times relatively similar. So when it comes to the housing market, guys, we're going to jump right in. I'm going to share my screen like I always do. And if you don't mind, just go ahead and subscribe and get us out to more and more people on our channel here today. But thank you for watching. This is going to be a fun one. Let's jump right in. And I got to start with housing data, guys. We're going to start with housing data because this is what it's all about. So let's cheat here and go to December 14th. And then I'll go to December 16th, okay? But December 14th, it says our latest table for the CMI index right here for the 17 largest cities. We love to do this because I think it's important that you guys know the micro niche markets throughout Phoenix. And here are the top 17, including the overall largest city in Arizona, which is Phoenix, of course. But you have, look at this. I mean, Paradise Valley, 94.7. I will make a prediction to you guys right now that is going to change. And you will see this green in January at some point for sure, because it is a seasonal market with a lot of money coming down here in the new year. We're seeing people right now on the holiday, binge, if you will, right? Where they're just doing the holiday stuff and not paying attention to the housing market, even though they may have a need or a strong desire to do something about their current situation. But you see Paradise Valley, 94.7, that is low. That's a balanced market. Technically, remember, anything between 90 and 110 is a balanced market. Anything above 110 is going to be a seller's market by definition. And the Crawford market's very good at taking in all these different indicators, especially supply and demand, and then giving you a number so that you can know exactly where it stands in almost real time, unlike other metrics out there and rating agencies that is always lagging, like the Case Shiller index, lagging about 3 months behind where we're currently at today. Crawford market is not like this, and it's niche to Phoenix, and that's why we're showing it to you here today. You can see Chandler, Scottsdale is green, Chandler is green, and Goodyear is green. Now, last week it was just Goodyear and Chandler. Now, Scottsdale is adding to the mix, albeit it's only 1% right here, but it's still above a balanced market. Now you have Maricopa and Buckeye still getting hammered. Why? Well, because again, you have a lot of new construction. Again, across the board, demand is down, guys. Across the board is down. It's not just applicable to certain cities. It's down across the board because it's the seasonal demand slump, if you will. It happens every single year. But we're also going to talk about the seasonal demand boom, which happens every single January, almost like clockwork. So I'm going to show my screen here again, and we're going to talk about that. I'm going to jump around a little bit, but look at this chart. All right, this is sales per month. This is for the whole Phoenix area. Now, don't focus about over here because we're not there right now. We're in December. Okay, it is what it is. But what I want you to focus on right now, guys, is this part right here between January and February, really January to March. You can see in January and March for the last 4 years, it has dramatically increased in terms of the sales, the real estate sales occurring the first 2 months of the year. It's not, guys, it's not even close. Look at the dramatic increase. So, January, this is 2023 last year, took off. Okay. Let's look at 2020, took off. 21 took off. 2020 took off. All of these took off over the first 2 months of the year. So, if that's the case, what do we think is going to happen in 2024? Do you think it's going to be an outlying 1 year? I don't think so, guys. Now, look, you want to play a game with this? I love playing games. Let's go to 2019. Let's overlay that one. Bright green. Look at that. Boom. Same thing. That even went further into May. Crazy enough. Let's go 2018. I bet you it's going to be very similar. Similar path. There it is. Boom, boom. Big skyrocket between January 1st and March. I mean, let's go 2017. Why not? Same thing, guys. The pattern repeats itself, and that's 7 years. One more? Okay, let's go one more year. 2016, same thing. And guys, it goes over and over and over again. So now you take this very colorful graph right here and you overlay that, or you put on top of it the fact that the Federal Reserve already did what they did, hinting to 3 hints already in 2024. And a lot of economists will think, or will say now that are in the know, that they think it's probably going to be somewhere around up to 6 reductions of the federal funds rate to hit their target rate where they want to be. And you got a situation on hand right now, especially an election year, where the market is going to get busy. It's going to get busy. Now, most markets don't have a dramatic increase normally as a cycle every year like Phoenix does, where it goes dramatically up from January to March. So I think they're going to get busy too because you have a lot of demand everywhere, guys. There's demand everywhere for housing. And if it's affordable, again, prices don't have to drop if rates come down because it's not about the price of the house as much as it is the monthly affordable payment that that individual has. And they have a rate at 5.5 compared to 8. It makes it much more affordable to afford that house at the exact same price it is today. So that's what's going to happen. I firmly believe it. I know there's going to be a lot of naysayers out there, and the naysayers, you have your opinion. I'm cool with it. I respect it. I like to hear it. I like you put it in the comments and let me know if you disagree, because that's what makes this great. You don't have to agree, but I would challenge you on asking you where the data is that supports your theory that the market's going to continue to go down and prices are going to drop 10%, 12%, 20%, whatever you think it may be, because it's just not going to happen anytime real soon. Now, it has to happen at some point, right? We all know that the markets do reset itself price wise. It does, every 20, 30 years, maybe even more than that if it's dramatic price reductions. But right now, we're talking in the near term, so you can make the most informed decision over the next 6 months. It's just not going to happen, guys. Now, maybe after 6 months, at the back half of 2024, something will go on. But until something major happens to the world, the economy, etc., right now, and that's all you can play with right now, the data would suggest that you should consider potentially jumping in to buy, because it's going to get more competitive when we start here in January, especially in Phoenix. So right now, guys, I'm telling you, if you have the chance to buy a house for investment purposes or your own self to live in, you need to call me today, call a team member today, and have that conversation about what it looks like for your specific situation. Because I'm telling you right now, if in January to February, it's going to get more competitive. When that happens, it's going to drive the price of the property you want, if you have more than one offer, up in order for you to get it. So you're going to see some of that happening. This is going to be recorded. This is going to be on a YouTube channel. I'm going to go back to it in 2024 sometime and say, I told you so. And if I'm wrong, I'll admit it. But I just don't think that's the case based on the data and data alone. All right. Let's go back over here to my screen, and I want to show you another Cromford statement here. So right here, the CMI for all areas and types appears to have finished its decline and has settled around 104. It appears to have settled its decline around 104. Okay. Now remember, 190 to 110 is balanced. Okay. So it's going to, overall, 104 balanced market. In the balance zone between 90 and 110, in fact, it reached a low point of 104 last Monday and Tuesday and has eased up to 104.2. Okay. So 2/10 of a point on the score, not a big deal, but it went in the right direction. That's interesting. That shows you a bottom. And we're in real time, guys. The Crawford Report's going to give you as real time information as you can possibly get out there for anything like this. Because remember, the housing market is a slow moving beast, right? It's a yacht. It's a cruise liner, I should say, not even a yacht, cruise liner, not a speedboat. So if it just turns a little bit, 2/10 of a point, maybe the bottom has occurred, and now through whenever it's going to turn around, we'll see. This is partly because the demand index has stopped declining, partly because the supply index has stopped rising. That's interesting. They are all showing little inclination to move at the moment. We probably won't get much action or feel for the direction until we get to the second week of January, which is also true because, again, look at this chart. Second week of January, we can start seeing if this trend of going up is going to hold and how steep it's going to be, right? Perhaps surprisingly, the lower interest rates have not brought a lot of new signings. The number of homes under contract is only 5,700, and the lowest count since January 8th of this year earlier, right? Well below the 6,300 we measured the same time last year. Yesterday's rate for our 30-year fixed loan was 6.64%, while the 30-year FHA rate was at 6.14%, which is so much better than 8%, guys. These are much lower than a month ago and far below the rates they were in mid to late October. Okay. It is entirely possible that buyers are waiting for January. I think that's true. Look at this. I think that's true. That is very possible before committing themselves to house hunting during December. But guess what, guys? Zig when everyone else is zagging. So if you have the ability to do a little house hunting right now before Christmas or right after Christmas, I would strongly consider it. With the CMI above 100, we should not be seeing significant weaknesses in pricing. So I hope buyers are not waiting for overall price drops. Individual listings give us price cuts all the time. True. But these are balanced by new listings coming at higher levels. Any price weakness is likely going to be concentrated in the areas with the lowest CMI, such as Maricopa, Buckeye, Queen Creek, and the outskirts, right? All right. So this is interesting. And you see these right here: Maricopa, Queen Creek, Buckeye, Cave Creek, etc. And surprise, so they're all in a buyer's market. So if you're looking to buy down there, especially as an investment property, maybe you need some sort of 1031 where you have to identify a property before the end of the year to satisfy your 45-day requirement. This is a good time to do it. You're going to have no competition on the property you're buying, and you can dictate terms a lot better. Okay. And you see right here, one more graph, which is always interesting: average list price per square foot. Okay. See right here, this is the green line. This is the under contract list price per square foot. And this is the closed down here. Look at that gap, guys. It is not getting closer. That means that this is right there. I call this is the room that buyers have for negotiation. If the wider this gap is, the more room you as a buyer have when negotiating the purchase contract for the house you want to buy. Look at that. It is not getting tighter. I think that's going to change in 2024 as rates potentially still come down because we know that buyer demand is still there. Okay. All right. Those expecting, here we go. Those expecting and are hoping for strong price moves either up or down are probably going to be disappointed. Conditions would need to change a lot for either event to occur. Well said. All right. Now, moving on here. Let's go to what Zillow and Redfin are talking about here. Mortgage rates, housing inventory expected to see slight improvement for 2024. All right. Here we go. After a year marked by volatile and frequently high mortgage rates, little inventory, and affordability issues that sideline many buyers in the 2024 housing market outlook offers more of the same, albeit with some relief. Now, this is going to be maybe a little different than what the Cromford report says because this data is always lagging. Zillow, what they have is lagging compared to a micro niche service like the Cromford report for Phoenix. Okay. Housing economists vary somewhat on their assessments of what's to come in the for sale, in the for sale market during the next 12 months. and predicting factors like where mortgage rates will end up can be difficult. Okay. Although they agree that housing conditions will improve. Okay. Albeit only slightly. And that's going to be because of rates making houses more affordable. All right. Redfin, for example, anticipates 30-year fixed mortgage will fall to 6.6 next year. Redfin, I got a hint for you. It's already there. Okay. A prediction similar to that of the National Association of Realtors, which predicts an average mortgage rate of 6.3% in 2024. Next year's rates will close around 6.5, according to Realtor.com, but most of 2024 is expected to see an average of 6.8. Now, they could fluctuate back up a little bit, but if we're already at 6.64%, which we are, here you go, guys. There's the graph, 6.64% as of just a few moments ago. And it's up 0.02% from 6.62 just a day or two ago. So if we click on, let's see, let's go to the 30-year fixed. Okay. We can get a better picture here. The graph will be bigger. And you'll see that, look at this decline. I mean, right here that is October right here, 18th, 19th right here. It was the highest they were, and this is unbelievable, guys. Look at that rate. So that drop puts us where we were around May of earlier this year. This is awesome. A great time to buy, and it could get better in 2024. But please understand the reason why you may want to consider with rates being, well, Kelly, I should wait, right? Rates are going to potentially come down. If you're saying that the Fed is talking about maybe a few more rate drops, you could. Absolutely, you could. And you probably will get a better rate, most likely in some part of 2024 if you choose to do that. However, if you have to pay $20,000 more for the house that you could pay right now because you don't have any leverage, because there's going to be 3 offers on the property you want to buy because everyone else is jumping in the market at the same time, then you're going to have a higher monthly payment, even with a lower rate. If you lock in the price you want, the terms you want right now for a house, even though the rates could go down 24, you can always refinance. And if you do get a mortgage rate buy down, which I would highly recommend because you have the leverage to do so right now, you will have that money credited towards your refinance. You do not lose out on that money that a seller gives you anyway in the negotiations of your deal when you go to refinance next year because rates go down another half point or whatever it may be. So keep that in mind. Food for thought. All right. So this is the mortgage rates. Now let's go to the NAR. The National Association of Realtors also had some predictions of their own. Okay. They predict increased existing home sales and improved conditions for home buyers in 2024. They forecast 4.71 million existing homes, improved outlook for home buyers in 2024. Guys, 4.71. That is a far cry from where the prediction is in the low 4 million number for finishing 23 out nationally. The NAR chief economist Lawrence Yun on Thursday presented several predictions for 2024 at their summit. Yun is forecasting 4.71 million homes to be sold in 24. He also says that Austin, Texas will be the top real estate market to watch in 2024. Yun foresees 1.48 million housing starts, including 1.04 million single family and 144,000 multifamily starts to begin. Okay. Home sales will begin to rise up next year. They will go up, not down, next year, up 13.5% compared to this year. And the median home price will reach $389.5, up 0.9% year over year. Now, guys, on a side note, for myself in Phoenix, I can't speak to the national housing market, nor do I want to, but I do believe, I'm going to say it right now, I think our market overall in Phoenix will be up by the end of 2024 about 8%. I think it's going to be 8%. I could be off on that, but given the data and everything I follow, I think that's what we're looking like in 2024. So that all being said, if prices go up, could it still be more affordable on a monthly payment? It could be because of where rates end up settling at. But nonetheless, if you buy now, I think you're going to get an 8% return on your money by the end of next year. On average, again, just based on data, the demand, housing starts in Phoenix, et cetera, and lack of supply. Lack of supply based on where the demand is sitting at right now today. Okay. So keep that in mind. And then NAR has these additional predictions, which is interesting. But again, we won't read through the whole thing. But the point is, they see a better housing market in 24 than what's in 23 today. Okay. Most housing economists say the Federal Reserve's goal of taming inflation has proven to be successful. That can mean interest rates cut by mid-2024. I think it's going to be sooner than that, though not everyone agrees that will occur. All right. People have their own opinions on that too, as well. It all kind of still depends on inflation. The CPI index was at 3.1% annual rate in November, a slight decline from 3.2 in October, and latest evidence of tempering inflation. The Fed has a stated goal of reaching 2% inflation. All right. Inventory may improve the picture. We need to have more inventory get on online. That would be great. But again, you have this whole issue of two-thirds of current homeowners have a mortgage rate of 4% or less. You need to be able to speak to those people. And how do you do it? You get their rate close to 4%. Now, close could be 5.5. Close could mean 5.75. I think around Phoenix, close will be 6%, honestly, for most people to make that move between a 4% or 3.75% locked rate they currently have today. So as that comes down, more and more people will choose to sell their house to move up, move down, and take advantage of the rate at 5.5, even though it's not as good at 4 or 3.5, which they currently have. But I think that's the sweet spot for Phoenix. Okay, I really do. And again, NAR. Here's some of the predictions. Right, we just went over from their own article. Okay, but affordability is still expected to be a challenge, guys. Just because rates come down a point or two doesn't mean everything's going to hunky dory. We still need inflation to be tempered. We still need wages to increase. We still need these things to happen so that the gap isn't so wide. Because when it gets really wide, obviously the bubble will pop. But again, with all the equity people have, and with rates being so low on these 30-year fixed mortgages that everyone has at 4% or below, you aren't seeing the scenario in which the housing market bubble does pop anytime soon at all, based on, again, just the facts, not feelings. Okay. Let's go over here. Let's talk a little bit about the Colorado River. We talk about water a lot on this show because we live in the desert, and we have some water. We have some water unique situations that a lot of people want to blow out of proportion. Okay, but guys, I'm telling you right now. Let me repeat this right now before I go into this at all. Arizona, in the Phoenix area, all of the suburbs, all of them except for two, have 100 water rights, assured water supply. Okay, for 100 years, and it's rolling starting today, and it'll be another 100 years from tomorrow, and another 100 years from the day after that. Until that changes, there'll be a guaranteed water supply in groundwater alone for these suburbs, these cities around the Phoenix area for 100 years. Now, the two right now that still don't have it, although most of these two towns have an insured water supply, just not a certificate for 100 years as of today, is Queen Creek and Buckeye. Those are the two. So keep that in mind. But again, we're talking the majority of Queen Creek has it. The majority of Buckeye has it, but not every single part within their city boundaries. So it's interesting how people want to blow us out of proportion. That's not to say we shouldn't take this serious today and try to formulate a long-term plan. We absolutely should. But as technology gets better, that will also help. Now, keep in mind, Phoenix is the second highest rated city in the world when it comes to water conservation, behind Tel Aviv, Israel. So this is good because we know how to conserve already, and it's just only going to get better because we have to live in the desert. Now, the Colorado River supplies about 44% of our water in the Phoenix area. That's it. There are other water supplies that we have, but everyone wants to think the Colorado River is the end all of end be all, but it's not. It's a big water supply and one we need to take seriously, which we do, but we already have an agreement for a short-term conservation plan in place through 2026. Arizona, New Mexico, and California, the lower basin states, okay, in the western region here, that all receive some sort of benefit from the Colorado River because it is a huge water supply. But again, what this is saying is that normally the annual Colorado River Association, where these people get together and they try to figure out how we solve this issue of future water use from all the people living in this Southwest United States, if you will, the western part of the United States, they're not so worried about it this year. That's all this is saying because they have this temporary plan in place for those lower basin states through 2026. But instead, that gives them some time, gives them some relief to be able to bring in tribal members, farmers, representatives from the different states and cities and counties to all get together and try to put their heads there to to basically come to some sort of conclusion and agreement on long-term water usage for the Colorado River. So this can get really, really boring. So we're not going to spend any more time for this, but just know that people are working on it for a longer term solution past post 2026. Okay. And let's move on here. Legacy Sports, guys, this is big. This is a big, huge sports entertainment center out in East Mesa, Arizona, and it's been in bankruptcy, been a problem for a while. But they have pickleball. I mean, this is amazing pickleball facility. But they have basketball, volleyball indoors. They have outdoor football fields, soccer fields. You name it, flag football. They almost have it, if you name it, right? And but it's been bankruptcy, and a company finally just bought it for a song, by the way, in my opinion. But the 320-acre sports complex in Southeast Mesa ran into financial trouble earlier this year, and AZ Athletic Associates LLC, out of San Francisco private equity, they bought it for 25.8 million out of bankruptcy, and they are renaming it. Oh, here we go. It's a 3,000 seat outdoor stadium, a 2,800 seat indoor arena, 35 soccer lacrosse football fields, 57 indoor volleyball courts, 8 baseball and softball fields, 20 basketball courts, and more. It is vast. It is pretty cool. And they renamed it to AAG, I believe, right? Yeah, here it is. Athletic Grounds at Mesa, okay, or AAG. That's the new complex. So if you have kids or you're coming in town for, some sort of tournament with your kids' sports or whatever, and they say we're playing at AAG, this is it. It's no longer a legacy sports complex. So pretty cool. But they're going to renegotiate leases, and they're going to do all kinds of stuff to try to improve the situation so that obviously they don't find themselves in bankruptcy again. All right. Now, some national news real quick. The IRS, did you know, they are increased the standard business mileage rate for 2024. So if you take a deduction off your car for mileage, this is good news. All right. The standard business reimbursement rate will be bumped up 1.5 cents to 67 cents per mile effective January 1st. So if your CPA doesn't bring this up to you, you may want to look at finding a different CPA. This is pretty elementary, and this is good because it'll save you more money on your automobile write-off. All right. But not all the rates will increase for 2024. The IRS set a new rate of 21 cents per mile driven for medical or moving purposes for qualified active duty members of armed forces, down from 1 cent before. And they go on to more. But the main thing I wanted to talk about was that main overall write-off up to 67 cents per mile for 2024. That's good stuff. All right, back to Phoenix. Here's how holiday travel is shaping up at Phoenix major airports. Airports, plural, right? So obviously you have Sky Harbor. That's our main airport, which is the international airport. But you also have Gateway in Williamsville Gateway in the Southeast Valley, which is pretty cool, and it is expanding constantly, okay? But what they're saying is this holiday season, airlines move more passengers than ever with both commercial airports at the Phoenix area, and they are set to have record years. So that's pretty cool, guys. People are coming down to Phoenix for a lot of things, for college football bowl games. They're coming down for the weather. They're coming down, believe it or not, for real estate and buying that second home. Maybe relocating, guys. We get calls all the time from people on December 26th, especially who are in town, who are going to be in town, and they want to know what's up with real estate. They want to go see some houses. They want to go see some stuff because they're down visiting grandma, grandpa, or whatever. And it's 72 degrees on Christmas Day. Hello. So like, yeah, I could do this. So let's go check some things out. So it's going to be busy, and especially as rates and more news that is positive comes out from the Federal Reserve and the government, etc. That's only going to fuel that demand that people want to be or have a slice of that Phoenix real estate heaven. So that talks about it. Okay. Now, a few more things here, then we'll be done. But Tesla ordered a recall of all vehicles with autopilot. All right. So I have a Tesla. I didn't know about this. This article is for me, as it is for anyone else who has Tesla. And maybe you're a stockholder or shareholder of Tesla, and you need to know about this, but they're doing a recall of 2 million Tesla Motors cars on the road in the U.S., citing concerns over its autopilot feature. Okay, so just FYI, if you have autopilot on your Tesla, be informed. You need to call up your, or actually, you can't call. You got to go to the app, right? It's all tech, and you have to figure out what you got to do for that recall. Okay, and we're going to end this on a interesting note. But have you ever seen a gold closet? Well, this $20 million property in Paradise Valley is actually made out of gold. And look at this picture. This is crazy, okay? But there you go. Literally, it was a $1 million renovation job on the closet alone because it is gold. So I'm going to leave you with that. chew on that one for a little while. That's pretty crazy. So, hey, if you buy this property for $20 million, let us know. We'd love to show it to you. It's huge, sprawling estate in Paradise Valley. There's some inflation hedge for you right there. They say buy gold when inflation goes up. Well, you can buy some gold. It's already on your wall. So if things get real wonky in the world, you can just go scrape that gold off your closet, go turn it in and trade it for something, right? Some food in the future, whatever it is, right? And you'll be just fine. So there's my fun little article of the day to end this holiday style version of our Everything Phoenix live here show, guys. Thank you so much for tuning in. As always, I really appreciate you. Comment below in the post replay. Comment below if you have any questions. We will reply to you. We always do. And guys, we're going to take next week off because it is going to be the week after Christmas. Actually, it's going to be Christmas Day, I think, right? And so we're going to be off. And then we'll see you live in the new year in 2024. And we're going to see if my predictions come right. So to everyone out there, happy holidays, happy Hanukkah, Merry Christmas, Happy New Year. Thank you so much. We really appreciate all you guys for watching. And let us know if there's anything we can do for you. And we look forward to seeing you in the new year of 2024. Take care, guys. God bless you. And as always, Phoenix, stay classy.